Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So it seems some psychological pressure is rising before the CPI numbers report as markets start to behave differently, especially if you'll take a look, for example, on the gold market. So we'll take a look a bit later in our video. Its volatility has increased yesterday there. As you can see, some wobbling action around the target. On the Bitcoin, you can see outstanding rally right up to the 18,000 level. Which we also will discuss in another video today. On other currencies, you also could see a bit different action. For example, on the Japanese yen, we could see that it shows some strength in the Japanese yen and some downside action is keep going, while on the other currencies, for instance, on the New Zealand dollar, on the Great British pound, we do not see this type of action. So market starts some disbalanced action, and well, this is probably a common thing before a report. Speaking on the euro currency, market still looks heavy around major 107.55 resistance level. So in fact, 107.50, this is a confidence resistance level that we have mentioned in the weekly report. And market hasn't shown any significant or acceptable response to this level except maybe this performance, which means that market also can't just break it up and keep going higher. It means that this level probably is still valid, and market is trying to pass through it, but well, somehow stands right there. And this is a bit tricky moment currently, especially when you are waiting for a major data report release, because this data release could trigger the technical response to this level, and we could get the response to the monthly level as it should to be. Because if you'll take a look on the weekly chart, you could see that actually there's nothing significant has happened. It's difficult to call as a response to the monthly level. It's mostly market stands inside of it and right around it. The same story you could see on the monthly chart. And it means that this moment with this confidence resistance level is not played out yet. So it might happen today. And from that standpoint, at the current level, I would suggest that this is a good point for taking the new long position. Taking the short position, well, I don't know. This will be some kind of the wild card. If you're trying to take position before the CPI, you should be sure that we will get higher standing numbers, and it will trigger the demand for the dollar. It could start downward action right here. If you're ready for that, if some kind of the gambling exists, you probably could do this using intraday patterns to as a background for position taking, and placing stop somewhere above the OP right there, which is 105, not OP, this 127 extension. 1618 stands at 108.93, but probably if data will be stronger, hardly will get reaching of this level, more probable that we'll get the downside reaction. It's a good start. Potentially, for example, if you still would like to take the short position, you could wait for something greater. For example, maybe not today, but let's begin next week, we could get 127 hand and shoulders if we will be correct with this idea of the higher, stronger inflation in the United States, and this market could start preparing some background for reversal. So, for my personal views, it's not time, not necessary to be hurry up with the position taking. Only if you're a perfectionist and you would like to take the position right on top, trying to catch the reversal point, but it's really very significant risk stands around it. I prefer to act when we have some clear patterns on the back. Well, in the intraday charts, we do not have something really special. On the 4 time frame chart, you can see market stands in the same consolidation, keep going higher. On the hourly chart, the butterfly, it's very choppy, very heavy, but market is trying to climb higher and complete the extension. So this actually minor butterfly could lead us to completion of the extension of the daily chart. So we will see whether euro currency will creep right to this point by the moment of the CPI report. So for the long position, currently it's a bit late and market stands at the confluence. From the technical point of view, this is not good combination for position taking. Only if you would like to trade the data release and you suggest the CPI will be significantly lower, you could try to make the bet on the upside breakouts. For the bears, as I said, yes, theoretically you could consider the patience that stands in place and trying to catch the reversal point, but it's also accompanied with a significant risk. My personal view is that much simpler and easier with a lower risk is trying to take a position later if indeed CPI will be strong. We could try to consider some bearish patterns that might start forming on a daily chart. So that's my current view on the situation that we have on the euro.